What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 21st of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to not only dive into a really unique correlation that we're seeing across the board in most asset classes, also what makes each asset different in this correlation, but along with that, diving into the importance of digitizing currencies, taking traditional fiat currencies, tokenizing them, and being able to utilize those tokenized currencies in unique ways, and how this is becoming more and more of a reality for the next coming years. All right, so we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's video is Cybervein. Cybervein is a new age blockchain that allows companies and users to store and manage enormous amounts of data never available beforehand in previous decentralized storage solutions. Cybervein's target goal is to build a wide range of powerful, enterprise-ready services, and as of recent, they've not only been aiming to help medical workers in the fight against the COVID-19 pandemic, but have seen significant growth in 2020. To learn more about Cybervein's long-term goals, as well as their current progress and project philosophy, check out the link below in the description for more information. Alrighty, everyone, so let's go ahead and dive straight into taking a look at cryptocurrency markets. As you can see here, over the last 24 hours, the vast majority of cryptocurrencies are in the red, following about a 3 to 5% dip in Bitcoin's price. Now, if you're taking it really over the last per se, 48 hours, turning to kind of a little bit into yesterday's time as well. We actually had a pretty stark dip, actually right after we made the video and stuff. So what happened was that we actually didn't end up breaking resistance. So we'll spend some time diving into the individual TA on Bitcoin. I no doubt want to talk about it. It'll come up next. But I want to go ahead and just dive right into this topic that I alluded to, talking about, the correlation that we're seeing across a variety of asset classes. And I think this is very important to just visualize it. So I took the time this morning to kind of put everything together. I've been wanting to talk about this for the last few days. And what's really interesting here is to see how Bitcoin itself, right? We know that Bitcoin has been performing quite nicely over the last 2 months, ever since it set in those lows back in early March. I remember when I was in New York and that sell-off was happening. It was crazy. It was the second worst sell day for Bitcoin in history. It was the worst sell-off day for Ethereum's price. And now we have a little bit of time to reflect, because not only has Bitcoin risen back up, but we've also seen hedges such as golds and silver do quite nicely as well in the exact same period of time. In fact, what you see here is you see a very strong correlation, with a 2 to 3 day divergence in this case between different assets of when the bottom was set. Bitcoin set the earliest bottom. We had gold that came in second, and then silver that came in third. But not really trying to, put a rat race to this in this regard. Again, they all bottomed at generally the same period of time. And all three of them have had really stellar uptrends. We've had Bitcoin up about 121%. This is on the line chart. So if you're taking it into the candle chart, you're taking the bottom of the wicks, then in this case, you're probably going to get a much better percentage return for Bitcoin. But we can see here Bitcoin up around 121%, silver up almost 48%, and also gold up nearly 22%. So really good returns here across the board in these assets. And it makes sense that these assets would move the way that they have, because they're hedges in this case. There's something that can hedge against the current macro environment. They're not tied to any specific government. They're non-correlated assets in that matter. And along with that, these things can actually, through their actual properties of limitation, they're able to hedge against excessive central bank printing. And no doubt that they would start to move to relative highs here in this case that we haven't seen in a little while, with the central bank monetary policy coming into play. So I think that these have a lot more room to move. But I want to bring up one interesting thing that is still holding true, one that has even shocked me a bit, as much as I expected it would at least hold up to a decent degree, and that is the performance in equities. Now, you could look at a lot of different indices for different, stock parts of the stock market. You could look at the S&P 500, take a look at the Dow Jones, the NASDAQ. The NASDAQ is going to give you a slightly more exacerbated return of about 37 to 38%. I think the Dow Jones is probably around the same ballpark, if not a little bit less. But give or take, the S&P 500 is usually a very good neutral and non-biased approach to how the equity markets perform. You've got your outpacing sectors, which are usually tech, and then your underperforming sectors, which are manufacturing or, for example, basically standard consumer goods that people are buying. I'm trying to think of the actual term right now. But basically, it's basically cyclical goods that people are buying 24/7. The Procter and Gamble's of the world, the Johnson and Johnsons, right? So right now we have equities performing 35% from their bottom, and interestingly enough, they had set a bottom. They were the last of the four asset classes to set a bottom, but roughly speaking, has performed quite nicely. In fact, it's actually outpaced gold in the short-term window of time. Now, gold is outpaced equities here in the broader sense. If we take a look back here, right, gold just came back down to its lows. The S&P 500 is still well below where gold was setting its lows that it revisited back over here in November. So again, equities have been the worst performing right now. If you take the broader yearly or 2-year time frame, we've been seeing gold and silver and the ratios that we talked about outpacing the S&P 500. You can take a look at it for yourself. You can type in gold/SPX or silver/SPX, and you'll see it firsthand. We've been setting higher lows and higher highs. But what does this tell us in the broader sense? All these assets move in correlation. It means that even equities, right? Even equities in a market where it's probably a lot more of a bearish tone now, they will react to central bank monetary policy. The Fed, over these past couple of, really just the last 2 months, the Fed has increased the money supply faster than it ever has in history. It has injected mass amounts of capital, both physically, through physical dollars, through printing, and also digitally. Whether it's been its actions in repo markets, whether it's been the junk bonds that they've been buying up, pretty much saying that any risk taking is completely accepted now, because if they're buying junk bonds and they're lowering rates as low as they have, they're probably going to start buying up equities soon, right? So of course, all this central bank policy is going to help support equities. And this is a big point that I always try to draw, why I never talk about shorting equity markets. It's a fool's game in a world where central banks can print unlimited amounts of money. What you're probably better doing is asking a more important question. What market is leading? And I don't mean to toot the same horn time and time again here, but the key market here, guys, is Bitcoin. Along with that as well, silver. Right? You don't want to be too biased here and just say, put it all in one asset. No, I don't want to tell you guys what to do. And along with that, it's silly to just have yourself exposed to one specific asset. You should have a broadened portfolio. That's what most financial advisors will tell you, right? But that's just my personal take. You have to determine it for yourself. You can determine how much risk you want to take if you want to put it on one asset. I know myself, I'm mainly exposed to the cryptocurrencies, and it's for this reason here. Because when the tough times hit, when markets start to correct and start to rebound from the liquidity crisis, as all markets got hit by when we had the major pullback in equity markets. It really weighed down all global markets. When we got the rebound after the Fed monetary policy, I want to see who's the fastest horse in the race. That's exactly what Paul Tudor Jones said. And if you take a look over these last 45, 50 days, I guess in the case of equities, it's only been 43 days since we set the bottom. Which one's performing best? And this is Bitcoin. We're not even talking about some altcoins that have probably in the same period of time beaten out Bitcoin 20, 30, 50, maybe even 100%. Some have done really well. So again, very, very fascinating stuff. I think this is important to keep in mind. And again, follow what's leading the markets. Put your biases aside and focus on who's outperforming things. Anyways, going on here to the TA side of things, Bitcoin is going through a little bit of a pullback. To be completely fair with you guys, from yesterday, it's ironic sometimes the timing is just like, it's like spot on. I feel like the market's going against me sometimes. But no, I mean, for the most part, we've been actually pretty good on, calling the general uptrend here. I think that's something where we can have a little bit of confidence that I said to not fight the trend as we were going up into the halving event. And we did good. We went up to our target range of like the upper $9,000 range. In fact, we went all the way up to 10,000. But we've been experiencing some resistance with that key line of resistance we've discussed on the channel. And avoiding, focusing too much on the same topic time and time again, I want to actually talk a little bit on a shorter time frame and discuss about this pullback here. We're at a price range we need to see hold here, in my opinion, because if you take a look here, right, at the last couple of days, we can even take it here just to simplify to the 4 hour, right? If we don't hold around this range of around 9,200 to 9,300, where we're currently testing right now, the next serious price range is down here where we went to on the halving event, around 8,500. It wouldn't be the end of the world, but I would say to set that higher low at a support range that we've seen tested in the past, and also what was previous resistance, would be really key to provide a signal in price that we're going to break above the long-term wedge. And if we can get that, we're probably going to 11,000. If we can't hold here within the next 24 hours, it's probably that we're going to break through and come down here for an even more dramatic sell-off. It wouldn't be the end of the world. Again, if you take it from 10,000, right, you're only taking about $1,500 off price, right? It's not the end of the world. That's a 15% pullback, right? So again, wouldn't be the end of the world, but might be that we have to come down and retest that. I think we have a good chance of holding up here. We'll see what happens over the next few days, but you can generally watch it if you want to set your stops or trades. I don't really care. I'm not adjusting my positions, guys. It's just for me. I like to look here and see if I can estimate how price is going to hold out here over the next few minutes. So we can see here, sell side pressure is picking up. We'll see if we can get a rebound. Maybe we'll check it at the end of the video just to see where it's at, and I'll provide some intake in case we expect that we might get the 8,500 level. All right, so I want to dive into a little bit of a discussion here. As we talked about with the assets that have been outperforming this market, I want to talk about the thing that's also going to provide a major bolster to cryptocurrency markets, and I think it's going to be a major on-ramp into the cryptocurrency space as well, to be able to buy Bitcoin, to be able to buy Ethereum, to be able to buy a wide range of ERC20 tokens and other cryptocurrencies, and that is the digitization of currency. And this is not just true for the dollar, where it's been most predominant in the form of stable coins, but it's also going to become a reality through central bank digital currency for other types of currencies. The euro, probably the Japanese yen in the coming months. We already know that the Chinese yuan is being digitized by the People's Bank of China and the Agricultural Bank of China. Right? There's a lot of people who are now starting to work towards building these systems in the back end, and a lot of them, especially China's, is starting to look like it's coming to fruition here within the next year. This is going to set massive ramifications, and as one country joins in, it is going to knock more countries into the trend. So why would digitized dollars be a beneficial thing? What's so revolutionary about it? Don't we already have digital dollars to a degree? Well, I would say in a sense, yes, we do have digital dollars through centralized databases. So when, for example, I'm sending money from, Bank of America to JP Morgan, in that case, we're doing a digital ACH transfer, or we're doing a wire transfer of some sort over the SWIFT network. Right? So these traditional payment networks, they can do their job, but they're highly inefficient, so they're not good at getting liquidity out in a timely manner. And along with that, they're very, very expensive. Right? These are archaic systems. The SWIFT network has been around since the 70s, and it hasn't seen a dramatic shift in change, or at least in the sense of its improvement in speed and cost effectiveness. So what happens here, right? We go from a system like that is still prevalent, and I know many businesses who have to pay these crazy wire transfer costs in order to actually be able to send funds to other businesses or other individuals. And you go to something like USDC, whereas when you digitize that dollar, after the first time, it's on the Ethereum blockchain. And no matter if I'm sending $1 or if I'm sending $100 million, I can send it in a matter of less than 30 seconds. And I can pay somewhere as little, even during a time right now where Ethereum hasn't even fully scaled out. On chain, I can send a transaction for a matter of anywhere on cheap days around 1 to 2 cents to more expensive days around 8 to 10 cents. How incredible is that? How much of a dramatic shift is that from the $25 to $45 wire transfer fees that you and I probably have to pay at our bank if we want to wire money to Japan? I can do the exact same thing from one cryptocurrency wallet to another in a matter of seconds. And there's no permission required. It's digital dollars. It's the sense of the word itself. Outside of the pure element that there's still a lack of privacy on public chains, and there is some form of traceability which needs to be improved. Generally speaking, right, there's a sense of anonymity, and along with that, I can exchange it to someone no matter who they are, where they are. I can send it across the world. And this is really going to call on central banks to build better systems. And this is why even people like Jay Powell, again, I know we haven't dove through too much in the article. I recommend you guys read through this. It's actually a really good piece by Axelrod, from Cointelegraph. Really talks about some of the good updates in this space. And you can read, I have close contacts who have been watching a lot of the public webinars and stuff that the Bank of England and the ECB have been doing and talking about digitizing currency. And it's a reality. It's coming sooner than you think, guys. This has been talked about since 2015. It was the first post in the International Bank of Settlements, the central bank of central banks, where someone put this proposal together of a central bank digital currency. And it looks like it's finally becoming reality. So it's going to be interesting to see, what's going to happen with, central bank digital currencies, which I'm actually not too negative on so long as they keep to a certain set of principles. It needs to act like a digital dollar. And honestly, if you have the tried and true, issuance, in this case from the central bank, it might even be more trustworthy than having to trust someone like Coinbase or so and so, in order to have one-to-one backing with physical dollars or digital dollars compared to your crypto tokens that you're generating. In this case, it'd be a one-to-one backed ratio. So anyways, it's an interesting topic. I could ramble on about it forever, but I really got prompted to talk about this because of my good friend Alex Sanders and stuff, who talked about this with a really interesting individual. So he did an interview here with Brent Johnson, who's not only been on Real Vision, he's been around the block and stuff and talking about the kind of liquidity crisis that's still persisting right now around the world. Dollars are in massive shortage right now. It started to become a little bit alleviated as the Fed has continuously injected more QE programs. But this has been a point that I've talked about, not only in the sense that the Fed and other central banks are still going to be printing mass amounts of money. There's still a huge gap here, trillions of dollars that need to be made up for with what happened in regards to the pullback we had in equities, and along with that, what's likely going to become a depression if we don't move quick enough in monetary policy. But also, if you overstep monetary policy, that could cause issues as well. And I really think this was an interesting conversation. Alex brought up something that I've yet to see anyone bring up, that I thought I was going crazy just kind of thinking about it to myself, and I've been meaning to talk about it. It's this idea of what he calls the digital thick shake theory, which is a modification of the dollar milkshake theory that Brent Johnson brought up. And it's this idea where stablecoins and digital cryptocurrency tokens that are pegged to world currencies issued either by central banks or companies like Coinbase and Circle in the case of USDC, or even Bitfinex when it comes to Tether, that they are going to help fill this void of the liquidity crisis in the world. And I think it's a really interesting question. Could this be the solution here? Because as Alex brings up, and this is what I've been thinking about a lot, it's this idea where you can send these digital dollars in a matter of seconds. It doesn't matter how much you want to send. Everything is permissionless on chain, on Ethereum, or on other blockchain networks that have stable coins. I think it's a truly incredible question. And I can tell you all right now, as I've probably alluded to time and time again, I am working on something that definitely plays a massive role in all of this. But I have to say, again, I'm very happy to see that other people are thinking alike. I'm really proud of Alex bringing this up and talking about this with Brent. And the cool thing is, Brent being such a respected name in the space, alongside Alex, of course. What's interesting is not only does Alex present this in a really plausible way, and it actually makes sense, but Brent actually agrees, no matter if it's going to be something like USDC or USD Tether, or if it's going to be a government central bank digital currency, that in this case, no matter what it is, digital currencies are here to stay. So I think it's a very fascinating topic here. Europe as well as Asia seem to be really leading the way here. We'll see what happens over the next few months, but I will tell you all, the best way to get involved in it right now is to first get some exposure to cryptocurrency assets, to move out of your bank, like get out of the banking system, go out. You can basically, with the current environment now, you can get ETH, you can buy Bitcoin, whatever, trade it out for stable coins. You can even, for example, like through ETH, you could go out and get USDC through decentralized exchanges. And in this case, one of the best places, I think, for a lot of people in Europe, more specifically the topic, is one of our partners here at the channel, Bitpanda. You can actually go through on their exchange, whether you're using Bitpanda Pro or just Bitpanda, get some ETH in this case, and you can basically go through and you can go out and merge into all these different stable coins out there. It's a really interesting market. So I just wanted to mention, I think Bitpanda is a good example of what you could use in Europe. A lot of people refer to them as the European Coinbase. And also, if you're in the United States and stuff, you can use a variety of other exchanges. If you're different geographical regions, there's plenty of exchanges out there that will give you that exposure to Ethereum that you really need to go out there and merge into a variety of other ERC20 tokens that are dollar stable coins. So they also have there's a few Euro projects as well. I think Stasis is one of them. But yeah, really it's mainly dollars. There's even a crypto Swiss token that was created by the Bitcoin Swiss team. Lots of interesting different players out there. But all in all, guys, that's it for the video today. If you liked it, please drop a like. I always appreciate it. If you could also hit the bell icon, subscribe. We always love having new people join the Data Dash family. And there's always interesting things going on, so I hope you guys get to stay tuned for every video. That being realized, though, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.